This is one of many weeks this year where I am going to be talking about and answering the complex but simple question of how's the market doing? We're going to be looking at this a lot with everything happening in the DC area with the federal workforce cuts and spending cuts. And so the headline summary right now is demand is definitely down. It's down moderately. Supply and new listing activity is up sharply, and that correlates directly with things really getting going with DOGE and the federal cuts about a month ago. But most of the market is still performing well for sellers because inventory levels for most submarkets are still well below the 10-year average, and there is still enough demand to keep prices up and keep competition up for a lot of homes. There are a number of underlying data points that I'm watching here to forecast the direction of the market. One is the showing activity. Showing activity is tracking about 10% lower in the DC area than it was last year. And last year was very low relative to the 5-year average. So showing volume, showing activity is definitely down. I'm also looking at the amount of contracts, homes going under contract, so pending contract activity. That is also down marginally this year compared to last year. But the big difference here is we have a lot more homes on the market for buyers to choose from. And so when you look at the number of homes going under contract being down, but also the number of homes available being up, it shows that our absorption rate is a lot lower this year than last year. And on the supply side, I'm watching closely the number of new listings coming to market each week and each month to see if we're getting a rush of people deciding to sell their homes, as well as total active inventory, just the total number of homes sitting unsold on the market. Both of those numbers are up, and you can see the trend line turn up sharply about a month ago, which is when things really started to get going with DOGE. The DC area is seeing about 25 to 35% more listings coming to market over the last few weeks. And the total amount of inventory sitting on the market in the DC area is measuring about 30 to 40% more than it was last year. Context really matters here as well. Yes, we are seeing a lot more new listings come to market and inventory building over the last month when things with DOGE really got started. But these are also national trends. What we're seeing is a combination of national housing trends as well as local effects related to the federal workforce and spending cuts. It's also important to zoom out and not just look at week over week or year over year changes to make a decision on how the market is going to start performing and what it's going to do to prices. It's really important to zoom out and take a look at these changes in the greater context of the market historically. If you look at the 10-year charts, you'll see that inventory levels right now in Arlington and Northern Virginia, despite the sharp recent increase to inventory over the last month, are still well below the 10-year average. And so there's still a very low supply. And with moderate demand, the market will continue to perform fairly well for sellers. The important question right now is how is this data going to affect the future of the housing market? And so demand is lower, supply is higher. Clearly, there's some downward pressure on prices. However, I think that downward pressure is on price appreciation, not on current home values. And so said another way, I think more likely than not, we will see little to no appreciation in the housing market for 2025. But I do not see too many submarkets losing current home values this year. Now, all of this is changing on a weekly, monthly basis, and I'll continue to provide updates on what I'm seeing in the market and adjustments to those forecasts. If you want to see a whole lot more commentary, charts, and data on this week's topic with how the market is performing right now, just check out this week's Ask Eli column. Thanks for watching.